Hello everyone. This is the pre-market report video for 2nd February 2023 in terms of Nifty and Bank Nifty. As most of us know now that yesterday there were two important events that took place. One, Indian budget. Second, US interest rate hike. Thus, in this video, I like to discuss briefly about those two topics rather than our conventional pre-market video. So, let's start. I took this graph from Stats of India tweet. If required, please pause it. This one chart kind of explains everything. Here, left hand side indicates where the government gets money from and right hand side indicates where the government going to spend it. To explain a bit, the total income of the budget in FY2024 will be around 55 lakh crore rupees. If we divide that, Indian government expects the gross tax collection for the next fiscal year should be around 33 lakh crore rupees, which will be 10% higher tax collection compared to the present fiscal year. Then an important bit here will be the remaining amount. Indian government planning to borrow near 18 lakh crore rupees from the external source. In terms of fiscal deficit target, this translates into 5.9% of the GDP. This is kind of marginally disappoints the investors as they expect the government to target 5.8% of GDP. Anyway, in that 55 lakh crore rupees income, around 10 lakh crore rupees to states will be the state share of tax. So, the remaining 45 lakh crore rupees will be the budgeted amount that's in the control of central government. Regarding the expenditure, near 11 lakh crore rupees, which roughly equals to 24% of total expenditure, will be given or paid as interest for its previous borrowing. Nearly 10 lakh crore rupees will be spent on railways and infrastructure related development. Then nearly 4 lakh crore rupees will be paid as salary and pensions. This is the overview of our budget. Now let's look at little bit deep. In this new budget, they tweaked this new tax regime. In a way we opted for that, then we may not need to pay any income tax up to 7 lakhs. And this eliminates the requirement of insurance and its deduction on income tax. So market expects this will be the huge hit on insurance sector, and because of that, yesterday there was a huge pressure on insurance stocks. For example, both LIC and SBI Life dropped over 8%, HDFC Life crashed about 10%. If we see Nifty, yesterday it closed with 45 points down. If we combine these three stock losses such as SBI Life, HDFC Life and Adani, then this three alone contributes to all the 45 points down. Then whom this budget is favor? It's favor for FMCG, as more money on consumer hand, they spend more on FMCG goods. Second, it favors for bus manufacturers since government said that they are going to pay for scrapping the old vehicles. And they will support both center and state government to renew all 15-year-old bus to a new one. Then it also very favors IT and tech as government allocates massive funds to push 5G and 5G related digital development. They also scraps excise duty for importing certain electrical related machines. Then regarding ITC, government increased the per unit climate calamity tax by 16%, and because of that, ITC share value dropped over 6%. But within 30 minutes, ICICI Direct came with explanation that climate calamity tax increase will translate the per unit tax from present 7 paise to 12 paise, and as a overall it's only 1 to 3%, which ITC can easily pass on to the customers. This explanation made the ITC stock to rebound near 10% from its day's low. Anyway, because of this budget and Adani issue, Nifty was really very volatile. At one point, it reached the day's high of near 17,970. However, as I said earlier, Adani and insurance stock made the Nifty to close near 45 points down. Surprisingly, yesterday, FII finally turns net buyers. They net bought shares worth approximately 1,785 crore rupees and DII2 net bought shares worth approximately 530 crore rupees. Then coming to US market, all three major index opened significantly down and traded down till the Fed chairman speech. But after that speech, both S&P 500 and Nasdaq rallied. However, Dow Jones closed flat due to the poor results of some index heavyweights such as Travelers and Caterpillar. Anyway, let's discuss about the interest rate hike and its related following Fed chairman speech. First of all, as expected, Federal Reserve increased the US interest rate by 25 basis points to 4.5 to 4.75%. Then regarding his conference, I'll provide the link in the description below. If required, please have a look. It's a 45 minutes long video. Here is the summary. He said for the moment he is going to keep his peak interest rate target same as December month, which was 5 to 5.25%, but he is going to provide more information on the next March month meeting. He acknowledged the fact that inflation was reducing and he was happy that finally PCE inflation dropped to 5%. Then he explained that he divided the core PCE inflation into three categories such as goods, housing and services. Here he can able to see the significant disinflation on goods as most of the commodity prices were dropping due to the less demand. Then he also able to see the drop in housing related. However, the remaining 56% services, there was no disinflation at all. One of the main reason he explained was the strong jobs market, which is kind of preventing the employee cost to cool, which in turn increases the services cost. So that was his concern. Goods price drop, we can't do much there since it's based on demand and supply, and thus he wants the disinflation on the services sector. He also highlights the yesterday's employment cost index, which was dropped to 1%, but still it was higher compared to the historical sense. As a summary, in future, Fed wants really bad jobs data such as marginally high unemployment rate and less number of jobs opening. Again, last night, the number of available new job openings in US was around 11 million openings, which is also very higher compared to that of the historical data. Also, we need to keep an eye out for the core PCE inflation and employment cost index. Anyway, in the end, Dow Jones closed flat, S&P 500 increased by 1% and Nasdaq rallied over 2%. After the market close, Facebook released its results, and because of that, the share price in pre-market now increased to over 20%. Because of this interest rate drama, dollar index dropped by 1% and closed near 101. About 10-year Treasury bond yield, that too dropped to near 3.42% from 3.51% yesterday. Regarding oil, in the OPEC meeting, they decided to maintain the output and no oil production cut. Additionally, US EIA released their stock reserve oil storage. The data comes as 21-month high value. This two news made the oil price to drop over 3%. At the time of this video, WTI crude oil is trading near 76.5 US dollars per barrel and Brent crude oil is trading near 83 US dollars per barrel. Last night, Adani scrapped their FPO. In US, it caused the Adani dollar bonds to drop into the junk status. Additionally, Credit Suisse assigns zero lending value on Adani Group bonds. As a knock-on effect, all these affected the Indian banking stocks. Because of that, in the ADR, both ICICI Bank and HDFC Bank dropped over 3%. However, IT stocks closed positive because of the budget push. Regarding SGX Nifty, at 3 AM Indian Standard Time, it closed at 17,616, which is kind of indicating 70 points gap down opening. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.